Naked Forex today. Pretty exciting. So what we're going to talk about here today is a trade called the Homerun Trade. One of my favorite trades, really. And what I like about this is that it will, uh, uh, it actually is a method that will help you to, uh, can everyone see the screen okay? I just want to make sure everyone can see the screen. Can you see the screen right now? Yes, sir? No, sir? Yes, please? No? Thank you. Awesome. It's going. It's going. All right. All right. There's just a bit of a delay. Sorry about that. Okay. So thanks again for spending time here. Sorry, guys. I'm used to using webinar software and the YouTube live thing, whatever. Anyway, so let's talk about what the home run trade is, and I want to talk about trading in general because I think it's really important that we keep perspective here. So number one, if you don't know who I am, I'm Walter Peters. I wrote the book Naked Forex. My broker called me up, said, "What are you doing?" I explained it to him. He said, "Can you do some webinars for us and for his clients?" And I did about naked trading. And then he said, "Do you want to do a book?" So that's where the book came from. I also do webinars on my own website at Naked Forex Now and FX Jake. So typically we run these on webinar software, but today we're going to do YouTube just because I thought it would be fun because there's lots of traders on YouTube. And a lot of people have been watching my videos on there, and they've said it's been helpful. So I wanted to post one live for you guys as well. Now, what the home run trade is, it's a very simple idea. I discovered it or came up with it the first time I ever did a little trader seminar, and we talked about it extensively. This was probably 12 years ago now, something like that, when I first did. It was the first seminar I ever did with another trading buddy of mine, and we introduced this concept. And it's evolved slightly, but it really is at its core the same ideas. Now, at the end of this session, you can go to the recording and download the PDF. So if you're watching the recording, you can get the PDF below this video as well to help you get an idea of what this is about. Now, one thing I want to point out about trading in general is that if somebody ever says to you, myself included, that you should only do this or you should only do that, they are wrong, okay? What you should do is start with what you believe about the markets and build everything based on that. And the reason why this is the case is if you, let's say you're starting out trading and you decide that I'm just going to find the best trader out there who makes boatloads of cashola and I'm just going to like copy what he or she does. That's not going to work because that trader has, unless that trader has the exact same beliefs about the market that you do, you are unlikely to keep trading that because when it runs into difficulties, when it has a losing streak, you'll give up and you'll look for something better or you'll try to modify it. I know this from firsthand experience. My trading buddy who got me into currency trading way back in the year 2000, he traded a completely different way. And I didn't want to trade the way that he traded. He likes to trade the 5-minute charts and the 1-minute charts and the 3-minute charts, and I didn't want to have anything to do with that. I actually was initially gravitating toward the 4-hour and the 1-hour. So, and I still do trade kind of the higher time frames, 4 hours, 6 hour. But this one is a 1-hour chart system, and I'm going to share with you how you might go about using this. So the first thing I want to point out is that we have some open position ratios here. Now this is a data that comes from IG Markets. Anybody can get this data. I want to be really clear. Although my programmer has made this fancy schmancy web page that updates the data every 10 minutes and all you have to do to get these data is to Google or whatever search engine you use, IG Markets and the currency pair. So IG Markets and CAD Yen, and you will see these data here. What this is telling you about the CAD Yen is that 67% of our traders are long the CAD Yen and 33% are short. Same thing up here, Pound Aussie. 68% of the traders are short the Pound Aussie and 32% are long. So I want to be in the smaller group here. And like, for example, on the Canadian dollar, a lot of traders are selling the US dollar against the Canadian dollar. So I want to be long the Canadian dollar against, a lot of traders are selling the US dollar against the Canadian dollar, and I want to be on the opposite. I want to be in this 21% group here, especially if the chart looks like it's going up. And you can see here, the Canadian dollar does indeed look like it's going up. This is the 6-hour Canadian dollar chart, and it looks like it's just making a little tiny bullish flag here. And it's probably going to hop back up. Now, I also note that the Canadian dollar's got some resistance levels up here and up here, that it's going to have to run into. But it certainly looks like it's on a bullish tear, and I want to do this. I want to take I want to take trades where I'm actually going long because everyone's selling, right? I want to ride this trend. Now, when I say everyone, I'm talking about retail traders. Retail traders typically try to pick tops and pick bottoms. I know this because I've actually tested retail traders around the world, and I've asked them how they trade, and most of them do that. Very few, 15 to 20% of the retail traders will actually try and trade with the trend, even though all of the trading books say, hey, the trend's your friend and all that. So what is the home run trade, and why am I showing you this stuff? The reason why I'm showing you this stuff is this is how I've kind of evolved this strategy. What I'll do is I'll go and I'll look for a pair that has some really good numbers. So one pair that has some really good numbers is the Swissy right here. The Swissy, 20% of our traders are short and 80% are long. So you guessed it, the Swissy is in a downtrend. Now, with the Swissy, what I would do is I would go to the 1-hour chart and I would wait for the market to hit a resistance level, a level where it's likely, it's going to fail. And the reason why I think it's going to fail is because it's failed there in the past. And then when it gets there, I will sell. Now, here are the rules for the home run trade. Obviously, we're just in the interbank market right now. The Asian market hasn't even opened yet, really. So we're in the interbank market here, and you can see a new day is starting. So this is the first candle of the new day. And what I'm looking for here is an opportunity to actually sell the Swissy. So here are the rules for the home run trade. I have a bearish bias because I know most of my retail traders are buying right now. Okay, so I know it's in a downtrend. Also, if I ever had a question, if the market's in a downtrend, all I would really have to do is look at a higher time frame chart. And you can see here, the Swissy has been going down. It's consolidated a bit, then it drops down, consolidates a bit, then it drops down. And perhaps we are actually going to drop down again. So let's have a look and see what happens. Now, for the home run trade rules, number one is I want to have a chart that I really like. I really like the Swissy because it's pretty bearish and because the numbers are really strong and showing me that it's likely that this is in a bearish trend. Number two is I have to wait 8 to 10 hours. So let me write these rules up here for you in case you don't get an opportunity to download the book. So what we want to do here, by the way, if you want more webinars, more information, and live, live trade updates, so you can watch me trade home run trades, the best place to go is right here. Go to fxjake.com/50, and you can get into our live trading community where I post 2 trading videos a day, Tuesday, Wednesday, Thursday, 1 on Monday, 1 on Friday. Go to fxjake.com/50 if you want to watch me, and I'll be posting live home run trades in there as well, okay, in the forum. We've got like $7,000 worth of courses in there too. So you can join just for a month if you want and quit. It's no big deal if it's not for you, but if you like this sort of stuff, now's the time to get in because it is actually, for the next couple of days, it's 50% off. So fxjake.com/50. Okay, so let's talk about the rules. Number one is I have to establish a really nice bearish trend or bullish trend. So find a trending market. All right, this is a trending market. Okay, I know it's trending because I look at the chart and it's going down. Then I wait for a pullback. Wait for a pullback. And then I wait for the market to print at least 8 to 10 candles. So you never take this. In other words, you never take this in the Asian session. Never, ever. Wait 8 to 10 candles. I also don't like to take it at the end of the day for obvious reasons because you're moving into the Asian session, right? So find a trending market, and I like to use the open position ratios to define a trending market. I wait for a pullback, right? So a pullback means we go against the trend, and then I wait 8 to 10 candles, and I take a 1 hour candle reversal. Okay, couple of things that are important about the 1 hour candle reversal. Number one is that it has to make, in the case of this Swissy, it has to make the highest high of the day because I'm selling, right? So what I'm trying to do is pick the top of the day, basically, okay? Which is, for a lot of traders, is quite appealing. So this is the one I took yesterday, and it got stopped out. Most of them get stopped out. This is not the kind of trading system for like scalpers who like to have like an 85% win rate. This is closer to 30% for most traders. But the good news is, if you follow the rules, and wait for the big wins, the wins will eat up all of those losses. This is the kind of system where, you lose, you lose, you lose, you lose, and then boom, you win. And you get like 10 times your risk back. That's what this sort of strategy is. It's not the kind of thing where, like, you're scalping 10 pips, you're scalping 10 pips, you're scalping 10 pips, and then you lose 30 pips one time. This is more about losing one R, 1R, 1R, and then boom, you get 6R. Losing 1R, 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 boom, you get 8R. It's like that. That's the kind of strategy this is. Okay, so this is the one I took yesterday because you can see it had come up to a level where I thought, oh, maybe this is, it's going to hit this level here and it's going to reverse. And so I sold it here on this candle, and then my stop loss was up here, and it got stopped out. Okay, it actually made another home run trade, but I was sleeping. I didn't take it. I actually have like an automated home run EA in the forum too for traders who want to like turn it on, and then it'll automatically take home run trades for you. And you can turn it off during certain hours or whatever. Like I like to take these mostly during the European or the New York session. So the 1 hour candle reversal has a couple of characteristics which are important. Characteristic number one. So let's define what a reversal is. What is a 1 hour candle reversal? Well, thing number one is it makes the high or the low of the day. Okay, so that's thing number one. Thing number two is that the market has to confirm that high or low of the day. Okay? Now, what do I mean by that? What I mean is it's got to actually trade lower than the reversal candle. And it did. It did trade lower. It actually traded lower on this very next candle here. Okay? Market must confirm. And the reason why we need this confirmation is because what you're going to notice is on these pullbacks, there's going to be a whole lot of times where the market makes a new high, like right here, but it never traded lower than the low. So let me just sort of visually show this, and actually we can do this in Forex Tester too. So here's the new candle high of the daily high. Let me go like this so you guys can see what's going on here. So this candle right, wait. Okay, see this candle right here? This is the high of the day. All right, has it been 1, 2, 3, 4, 5, 6, 7, 8? Yeah, it's been 8 candles and all that. So then what I say is I say to myself, is this the spot? Like, is this the trade I want to take? I would put my stop loss above this candle, but I have to have a sell stop below it. Okay, so my sell stop is below the low of this candle, and guess what? It's never triggered because what? The market keeps going higher. As soon as the market makes, this is really important, as soon as the market makes a new high, you now immediately have a new sell stop. So this candle made a new high, so the sell stop is now below that candle. This candle made a new high, so now the sell stop is below that candle, and boom, it's triggered on the very next candle. The beauty of this, even though you have a low win rate typically, is like in this case, we'd have like 16, 17 pips of risk, maybe 15 if you have a really tight stop, but probably 16, 17 pips of risk. I actually had 20 yesterday when I took this trade, 20 pips of risk because I got in a little bit late on this candle. But the beauty is, and I don't like to do more than 30 pips. Really, the sweet spot is like 15 to 22, right around there. Because if you have a 15 to 20 pip risk, it's easy to get 3, 4, 5, 6, 10 R on your trade, especially if you hook into the exact turning point, right? And who knows, we might have another one today. I would love for that to happen. I'll be watching the Swissy. And there will be other pairs too that I'm watching. So, for example, what would be another pair? Well, the Aussie would be a pretty good one. The Aussie's on a retrace right now. The Aussie Swiss would be another good one. The Euro Swiss would be a good one. The Canadian dollar would be a good one to go long on. And you get the idea. The Kiwi would be a good one. I like to look for the numbers to get over 70%. So when they get over 70% on my web page here, it turns red. For if over 70% of the traders are long, it's because I want to sell. If it's 64 to 69%, it'll turn orange here, which is kind of like alert, the CAD yen and the pound may be giving us a trade. And if it's 64 to 68% short, it'll go kind of this light blue. And then when it hits over 70, like the Euro Aussie did, it'll go dark blue. Now, it's not just these numbers that dictate, that I'm going to take a home run trade. We also need to have a pretty good looking chart. So, for example, to me, the Euro Aussie is not a good looking chart. So I would not look to necessarily take home run trades on the Euro Aussie, right? I mean, if you look at the numbers, the Euro Aussie says it's bullish. But actually, this is a little bit more bullish than I thought. No, it has gone bullish. I apologize. It's been bullish all the way back here. Actually, this is a pretty good move. It's had a pretty steep, drawdown. It's gone back against it quite a bit. That's okay. I'll be looking forward to. I'll be looking forward to bounce maybe off of this level right here. Yeah. Cool. Yeah, so a bounce back there would be great. All right, and then the other one that we said was Canadian dollar, which is of course a bullish move. So again, if we look at the 1 hour chart on the Canadian dollar, we may see a potential home run trade here. What do we have to wait for? Well, we got to wait for like 8 to 10 candles and then a local low, right? Not only does it have to make a local low, but then the market has to take out the high of that local low, right? So this would have been a home run trade right here yesterday. And then you stopped out right here. So maybe it'll make another local low, and then we can go long and so forth. You get the idea. The idea here is that the market essentially has to give you signs that it's trending and then signs that you're getting the reversal. And the reversal signs are essentially those rules. So our Swissy is right here, and these are the rules. Trending market, wait for a pullback, 8 to 10 candles, 1 hour candle reversals. If you want to watch more videos on this, get the automated EA, the expert advisor for MT4. Watch me take these trades. You can go to fxjake.com/50 if that's something that interests you. You can click the link below this video and you can get the book, or you can get more information about our private community. Our traders in there are really helpful and cool. Like if anyone's rude or whatever, we kick them out. And that's really only happened a couple of times, over the last 10 years or whatever. So everyone's really nice in there. It's not like one of those forums where people like say, "You're wrong." No, you're wrong. we don't actually do that. You can go to the free factory forums if you want to get into pissing matches with people. There's plenty of that out there. Okay. Any questions? I'm going to wait now for people to ask any questions about this sort of stuff. Any, oh, and actually we can actually go to Forex Tester. Let's do that. Again, if you want to join us, guys, the place to go is fxjake.com/50 if you want to join us. Okay, cool. Boom, boom, boom. Okay, so this right here is the Euro daily chart. And let's say that I'm like, all right, well, the market's been going down. It hit, it looks like we've got some resistance here, there, support here, which is basically where we just hit it, which is awesome. And maybe some here, and maybe some support down here. And probably down at the low too. So this would be my my chart for the daily. And then what I would say is I go, okay, well let's drop down to the 1 hour and see if we can home run this bad boy. So again, what are we looking for here? Well, we're going to be looking for. I love Forex Tester 4, by the way, guys. If you don't have a backtesting software, this one is awesome. And I have a link if you guys want it at a discount. You can get it here. They will pay me like $30 or whatever if you use my link, but you'll also save $50 here if you don't have it. Forex Tester 4 is awesome. So the way that I do this is I go, okay, well, let's see if the market can actually print 8 candles and go up, like do a retrace. Nope. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay. So right now I would be looking for it to make another high. Yeah, there's one right there actually. Okay, it's getting close to the end of the day, so I'm going to wait for the next day. 5, 6, 7, 8, 9, 10. Okay, this is making a low, so I wouldn't really. I need it to get up here. Ideally, it would get up here around 1460. Again, this is not really. It doesn't look like it's a good day. I really want a pullback, like it made here or here. I want a move up is what I'm waiting for here. 5, 6, 7, 8, 9, 10. There we go. So this looks good because it's making a high here. I want to see it make a new high. It did. It did again. I feel like I missed it now. I'm going to sell below here, put my stop loss up there. So I got 15 pips of risk, okay? That's a good look. Okay, let's just have a look here at the open position here. I really got in a bit late on this one, kind of like the one yesterday. But it's up 25 pips, so it's up like 2R right now because I had about 15, 16 pips. So it's up about 2R. Remember, R is the amount at risk, okay? So I'm up 2R. I'm going to make this bigger so you guys can see it. I don't know how the resolution is on this. This is another move up. 1, 2, 3, 4, 5, 6, 7. So this would be another home run trade, but it's not 8 candles. 1, 2, 3, 4, 5, 6, 7. So that's not 8 candles, so that wouldn't qualify. Doesn't matter. I'm already in one anyway. Okay, I'm up just a bit. All right, now we're talking. Okay, I'm up 3R right now, so I'm going to move my stop loss to break even, like this. Boom. And see what we can get. Now, what I want to pay attention to here is, where are we in terms of our, support and resistance levels? I survived that. Holy cow. Okay, cool. We are down here now. Okay, so we're down on support, and I'm going to close out this trade. Okay, does everyone see what happened here? I want to be really clear. Here's what happened. I had established that the market, and let's say that I use the open position ratios too. I had established that the market was in a downtrend, and I'd waited for a day where it kind of retraced upward, and it did right here. It made a new high. The market finally, the highest high is actually this candle right here, and the market actually took out the low here. So I put my stop loss above that swing high. I'm in the trade. I got in a little bit late, but that's okay. 15 or 16 pips of risk. And then now it's gone, whatever, 10R or something more than that. 11R, 12R in my favor down here. So I'm going to close out the trade. Boom. And that's basically what you're waiting for. Now, are you going to have to kiss a lot of frogs on the way? Yeah, probably. Probably, yeah. But this is how I like to trade these. I like to wait for a really nice win. Support and resistance is my friend in terms of targets. I can use a trailing exit as well, but you're working with the 1 hour chart, so you're going to get a lot of noise there. So this is how I would trade these. This is how I would do it. And I don't know what's going to happen here. My guess is it's going to close the gap rather quickly, and it does. So good thing I got out because I would have been stopped out at break even here. Usually when you get those gaps, they're usually closed within 48 hours in most cases. Not always, but most cases they close in about 48 hours. So that's basically the home run trade in a nutshell. And if you want more on this, you can go to the forum. You can get in right now, half off at fxjake.com/50. All right, questions here. Is there a specific time to put in the trade, or is it about the support and resistance levels? No, there's not a specific time. The main thing I've learned is to avoid the Asian session. So that's why I have the wait 8 to 10 candles rule. So I use 5 p.m. New York time as my new trading day. And what I'm basically looking for is I'm looking for the market to go against me, basically like all the markets are right now. It's actually quite fortunate that we're having this webinar today because, the Swissy is in a bearish trend and it's retracing. The Aussie is in a bearish trend and it's retracing. The Canadian dollar is in a bullish trend and it's retracing. All of these markets are actually quite ripe for a home run trade right now. So I'm glad that we're having this webinar today. For those of you here live, for those of you watching the recording, these trends may have changed by now, unfortunately. Does anyone know how to get to IG markets? I can show you. Google is the key here. So you go to Google, like this. This is how you do it. I'll do it for the recording. So you go like this, IG markets, and let's do the pound CAD. Boom. Okay. So then I go to the pound CAD here. And it should have the open position ratio. It's updated every 10 minutes. And you can see 54% of client accounts are short this market. That means that this is not a trending market. It's kind of like a 50-50 market, maybe a good market to trade support and resistance bounces, but not so good if you want to do home run trades. Watch the Swissy now. I'm going to type in the Swissy. So I just changed the end of the link there, USD-Swissy. 80% of the markets of the client accounts are long Swissy, so I definitely want to sell. This is the daily chart, by the way. This is the 1 hour chart right here. Okay? That's how you get it. Just Google IG markets and the pair that you would like. I like IG markets because they have a lot of pairs. That's why I had my programmer use them. And they also have a lot of traders too. They're not just a little tiny broker. They're pretty big brokers. They've got a big chunk of the retail world. Okay? All right. You can still use information from other brokers. It doesn't, that's not, it's really important that you just stick to one, I think. I don't think it's important. If you want to use a Wanda because you trade with a Wanda, okay, cool. If you want to use Saxo Bank because you like Saxo Bank, all right. I like IG for 2 reasons. Well, 3 reasons, really. One, My awesome programmer created a page that pulls all the data into one page. I love that guy. He's awesome. And that makes I can literally at a snapshot go boom. These are the markets I want to trade if I want to trade the trend. It's just so simple. Number two reason why is because IG Markets has a lot of traders. They're a pretty big broker. They got a lot of traders here in Australia. They got a lot of traders in the UK and in Europe. So they're a really good broker to pay attention to. You know, it's not like they just have a few traders. They got a lot of traders. And number three is they have a lot of pairs. So what you'll find if you go to Saxo or Dukascopy or Awanda, they have brilliant, you know, Awanda has great open position ratio data too. However, these guys only have a handful of pairs. They don't have, you know, all the pairs that we have at IG Markets. So, you know, if you're like me and you like to follow 30 plus currency pairs, you just don't have that data. You're only going to have it for, you know, 5 to 10 currency pairs if you use the other brokers. Okay. I think you can also get it at FX Book or something, and maybe at FX Street. I don't know, but I just think you need to find one that you like and just stick with it so that you're not confused, because you start comparing different brokers and all that. You know, that's a way to drive yourself batty, to use a technical term. Is it possible to have the open positions grill the way you have set up? Yes. For our forum members, it is. Our forum, that's a page that we have for our forum members, okay? So it's one of the perks of being in the forum. Again, if you want to try out the forum, you can try it out for a month. At half off, you go to fxjake.com/50. Why the 4 hour? You can use the 4 hour if you want. I like the 1 hour. So if you use a 4 hour, I guess you would wait 2 candles before you would look for a trade, and then you would look for one. You know, the advantage of the 1 hour is you can get in a bit tighter. Like you might have a 35 pip stop on the 4 hour versus a 16 pip stop on the 1 hour. That's the difference. You also might have a higher win rate, right? So this is a home run trade right here too, isn't it? So this is actually a brilliant home run trade. It's actually also a big shadow. See this one, guys? This is a big shadow and a home run trade at once. Candle 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Candle 10 prints. Candle 10 gives you a big shadow. You put your stop loss up here, your sell order down here. You got 13 pips of risk. How long before 13 pips of risk turns into 39 pips of risk? Not very long, right about here. You've got 3R here, you got 4R, 5R, 6R. So you might have been able to, if you pulled it off perfectly, you might have got 6R. Maybe not so perfectly, you get 4R or 4.5 or whatever. The thing about this is that if you hold out for at least 3R, what kind of win rate do you have to have a profitable system? If you're only waiting for 3R winners, then guess what? You only need to win 26% of the time, right? If you're winning 26% of the time and you're averaging 3 times your loss, you're risking $1,000 to make $3,000, then guess what? You're profitable. If you average even higher wins like 5R or 4.5R, and you're making 28% win rate, you're doing really, really well. So that's the home run strategy in a nutshell, guys. Am I missing anything here? Any other questiones? The support and resistance levels are nice, but it's not as, to me, the support and resistance levels are the spots where you want to see a trade. But like, for example, let's go and look at the CAD. All right. So if I was going to trade the CAD today, and I probably will, by the way, this is a good spot. Like if it were to fall down here today or tomorrow, to 32.50, I wouldn't. That would be pretty good. That wouldn't be a bad spot for a trade. It may not get all the way down there. It may go down to where it went yesterday, right? Because yesterday it went here. And actually hit it kind of twice yesterday. So it may only go down to 32.65. That may be a spot for a trade. But the key really is that it happens after the Asian session and that it confirms by trading higher. Okay? So I don't really care if it goes to 32.50 or 32.65, but if the Canadian dollar pulls back enough today, gives me a lovely, it'd be even great, if it was a kangaroo tail like this one or a big shadow prince or something to show me that, yeah, this is it. These are the spots that I think would be ripe for a possible home run trade on the Canadian dollar. How relevant are the open position ratios? If it's 95% long and 5% short, like the yen today, should it be cautioned against? The yen, I don't have that. I have my yen at 54% long and 46% long. So that I'm not sure where your data is coming from, but my IG Markets shows that. Here's the reality about retail forex traders, guys. Here there are a couple of things, and again, when we were talking at the beginning, where I said don't listen to any gurus when they say you always do this or always do that, just keep that in mind. Here are my beliefs. Okay, my beliefs are number one: most retail traders lose money. Okay, number two: most retail traders have very small wins and very big losses. Their losses are bigger than their wins. Interestingly enough, you can Google the article about this where the data from FXCM where they looked at 35 million trades or whatever it was, and they found that most retail traders actually have a better than 50% win rate. However, their losses are bigger than their wins, so they lose money. Most retail traders also like to pick the turning points. So when they see a bullish trend, like on the Canadian dollar, they think, oh, I need to sell that. Or when they see a bearish trend, like on the Swissy, they think, oh, I need to buy that. So let's keep all this in mind. If most retail traders lose money because their winners are too small and their losers are too big, and most retail traders look for a trend and look to go against it, then what are most retail traders doing? Well, I'll give you a hint. They're making money, if at all, during the pullbacks. When the market pulls back against the trend, that's when they are making money. Does that make sense? So they're really only the only opportunities they have to make money on these little tiny pullbacks against the trend. So let me show you on the Swissy, okay? I'll use a 4-hour Swissy chart as an example. So what they're doing here, because the Swissy chart has been going down, all right? Why do I think it's been going down? Because I look and it's going down, all right? The open position ratios tell me that everyone's buying, and so that means that doesn't mean they're going to move the market, by the way. Retail traders don't move the market. The institutions, the banks, the news, all that moves the market, not us, not little old me. So we wait for the clear direction, and then we know that our retail traders are buying here. So they're only going to have this kind of move. There's only 73 pips available here if they pick the absolute bottom. So, that's it. If this is the end of it. If it goes a little bit further, then they have a little bit more. But they're just nibbling little tiny wins against the trend. So what I want to do is I want to go against these guys. I want to take the sell when all of the retail traders are taking the buy, right? That's all the home run trade is in a nutshell. Are you going to get stopped out? Yes. Is it going to have a high win rate? No. Is it going to be frustrating? Yes. But can you automate this using the EA in our private forum? Yeah, if you want. The key is to wait for the market to set up the conditions and then turn on the EA, right? But that's basically how this works. That's basically it. I do not use the commitment of traders. That's a weekly report. I like the open position ratio because it's updated every 10 minutes at IG Markets. So, commitment of traders is good. That's usually that's a different strategy because you're actually looking at the pros, right? You're talking about the one, uh, the one that comes out every week. Those are the pros. So that's a totally different ball game, and that's kind of more long term trading because you'd probably be working with the daily chart or maybe the 12-hour chart if you're doing that. Okay. Yeah. People asking about the link. It's fxjake.com/50 if you'd like to get in over the next couple of days only when we have our deal on right now. Okay. Where are you putting stops? I just put them on this on the like here's the trade I took yesterday. I'll show you the trade I took yesterday. My stop was actually at 98. Okay? Here's my stop. Right here. There's my stop. And I sold right here. So I had 20 pips of risk. The trade I took yesterday on the Homerun Trade on the Swissy was right here. Okay? All right? 20 pips of risk. I sold at 78. Stop was at 98. If I had been a little bit more vigilant, I would have been able to get like 15, 16 pips of stuff, but I got a little bit crazy and I had 20 pips of risk. And I got stopped out. And you know what? I'll probably do the exact same thing today. If we get another good setup around here, probably do the exact same thing. Probably even go on the Canadian dollar as well. So if I get another one, I'll sell. If I get a bullish signal on the Canadian dollar, I'll probably do the exact same thing later on today. It doesn't. Okay, so there's a question here about I can't use IG markets in the U.S. because they're not offered to U.S. Residents or whatever. Here's the thing, that doesn't matter. Okay, you can have an account at FX Pro or wherever, Owanda or whoever your broker is in the States. You can still use the data from IG. Just like you can have an account at Saxo Bank and use the IG data. You don't have to use Saxo. That doesn't matter. What matters is that you understand where the retail traders are fading the trend. And right now, we know they're fading the Aussie USD bearish trend, the USD Swissy bearish trend, and the USD CAD bullish trend. We know that they're doing that. We know because of the open position ratios, right? You don't have to trade the same broker. What you have to do, in my opinion, and again, back test this in Forex Tester, make sure it works for you, make sure it makes sense and all that. But the key here is to find a market that you're really clear on the direction. And I like open position ratios. I like support and resistance. I like the structure of the market. Like the structure of the market here is a bearish market. To me, this is a bearish market. Okay, this Canadian, not Canadian dollar, but the Swissy here is in a bearish trend. The daily market is going down. It's making lower lows. I know it's been kind of hitting its head against the wall here on support, but that's okay because remember, even if we get out down here at where it's found support repeatedly, that's still going to afford probably 4, 5, or 6 R, depending on how tight the stop is on here. So as long as I'm getting 3+ R in my trades, I know that I can survive with a win rate of 27, 29%. That's okay. That's totally cool. It really doesn't matter if you're trading a different broker. It really doesn't matter.